weekend all. Ira Epstein of Linn and Associates with your metal market wrap-up and your metal market wrap-up for the weekend of October 10th, Sunday, 2021. Interesting week. Gold finished down a little bit on Friday, silver up, copper up for Friday, but what about on the weekly basis? We'll take a look. What's the market still fretting over? Well, certainly the jobs data didn't look very good. No matter how the spin is that the president and his team want to put on it, we keep dropping in new jobs. Are you not paying attention to that? We are adding jobs, no question. I give the president exactly what he said. He said we're adding jobs, and we are, but not at the pace that the analysts think should be added, not at the pace that the market wants to see, and that is problematic. Are we still finding that people aren't going back to work? Yeah. Why? Because we're paying them not to work. At the end of the day, the child care credits, all these other things that were not there under prior administrations are there. And if you analyze it, you have to come down to one thing. The mixture of COVID changed cultures. I get that. But if you keep paying people not to go to work, they don't go to work. And if you keep paying them not to go to work and you're crying, why don't they take that job? What is wrong with you with that logic? In the monthly chart of gold, the pattern is still one of what? Well, you still got the pattern of lower highs, the legacy of a lower low, but are you still with a lower low? So you got to come back to this one. There's the first low, 1670.330. You then come down to where the next lower low is, 1692.60, and you come up here. So you actually have a pattern of lower highs and higher lows. The market is sort of drifting around one number, the 18-month moving average of closes. The next charts will be all your weeklies. And this is a weekly close-only chart. I don't think that looks very bullish. Here's the 18-week. You're staying under it. The next thing I look at are the weekly bar charts. And as you can see, the market came back up and fought a battle here about a month ago, right through there, stepped back, didn't ever make it through that low, and has come up a little bit. So what does that mean on the swing line? Well, you have a pattern on the swing line of higher lows, higher highs. What the swing line indicator does is it just very easily allows you to look at a chart. Is it an uptrend, downtrend, and what is the risk associated with the trend? What do I mean by that? If you were to take out this low of 1721.40, well, you'd break the pattern of higher lows. It could give you then the risk. So from this current level of 1756.30, if you hit 1721.30, the risk in the market is that $35. Got it? To break the trend. Now we take a look and see what is the market telling us. Well, while the swing line is up with higher lows and higher highs, the bias is down. Bias is defined as to where price is in relation to a line in the sand, the demarcation point, the difference between being above it, being bullish, below it, bearish. Now, admittedly, that's my take on it. But I think all chartists look for neutral areas on a chart. I think all of them. Where's the resistance, support points, and the like. The 18-week moving average works for me. You might want the 20. You might want the 21. Whatever. But you'll come up with a number if you're a chartist that generally you have a moving average on a chart. Don't believe me? Watch Financial TV. Here's the 50-week. Here's the 50-day moving average. Here's the 200-day. There's reasons for it. Those are numbers that go back almost a business year when you're looking at 200 business days. And you take a look and see where you're at. Well, in this case, you're at the 100-week. If you break through this low of 1721.40 that we were just talking about, you already have the bias down. That could give you trend down, bias down. A potential mark could be the 1539 level. Where are the Bollinger Bands? Bollinger Bands are right here. What's the importance? The market will pay attention to them. It'll trade within them 95% of the time, which tells me if you do break down 1724.30, before that number is going to be in level of support. Where's the resistance? Back at the 18-week average. What number throws the market upside bias, getting over and closing over 1789.5? And where's momentum? Is it telling us a story? None. Often momentum, the slow stochastic, if it's pointing up or down, leads you into what the market wants to do. It's just drifting sideways. Not much of a story here. In the gold-silver ratio on the weekly basis, as long as this number's over that 18-week average, it means that the bias is up and you're needing to pay up with more ounces of silver to get 1 ounce of gold. On the silver chart, does this look bullish to you? In no manner. Lower highs, lower lows. I see the battleground. The battleground's crystal clear at the 100-week average of closes in green and the lower band. What's the slow stochastic doing? Both numbers were under 20 this week. Both were under 20 the week before and the week before. What do we have? Until the red line closes over 21 on a weekly basis, I contend the pros are going to be selling the market. If it closes over 21, the odds favor the market's going to make a run to wherever that 18-week average is between price reaching it. So the bears have control, but you're in a support zone. It makes it really a hard trade, not an easy trade. In the copper market, China finally came back from its holiday. So it was back a day. So let's see how everything plays out. For the meantime, you have lower highs, lower lows. You've hit your downside targets. Resistance 432.30. Momentum flat. Get over that and close over 432.30. You open up the door for wherever the Bollinger Band is. Stay like you are. You keep fighting that battle right through there. And you've got moving averages in the 100 and 200 that are very far away. In the platinum, the combination, as it turns out, the first battleground was so easy to call. I mean, this is what I call basics. If you don't see this, you better take some charting courses. As the market's falling down, it hits the 100-week average in the lower band. That should be your first support. If it gives ground, wherever the 200-day comes in, the market's oversold, bouncing from that right through there, fighting its battle. I'm going to repeat. If this battle gets lost, there's another support between the 200-week and the lower Bollinger Band. Market's still fighting its battle. This is September 10th. You start reaching down. So I'm going to be telling my clients, watch out. If you hit that, and you do, that's where we should see really good support step in. And boom, you get a rally that's up 49, and this is how you're finishing yourself off coming up there. If you didn't see that, take my charting course, because there's something you're totally missing. This was not the place to get short. This is the place to be covering your shorts. What about when momentum started turning on you as well with that combination? Recognize what you've got. And I'm not saying it was a buy. It was a place to no longer be short. That I will say. Dollar index, you got a lot of resistance on the weekly chart. You're fighting right now the 100-week, 200-week, and the upper Bollinger Band in a market that is what? Overbought. Overbought there. Could be a stall area coming in the market. Clear all that, I'll have to rethink it. I don't think it's going to be easy to clear all that. That's the point that I'm making to you. You know, if you don't get all this, there are ways you can take advantage of people to help you. Self-directed trading is not for everybody. It's that simple. If you were to line up a room and there were 50 people in it, I probably would tell you 15 to 20 of those people do not belong in self-trading. They think they're saving themselves money, but they're hurting themselves. It's not that a broker, when you trade with them, implies you're going to make money. It does imply you're probably not going to make the mistakes you would on your own. Got it? That's the difference. He'll tell you, where's their report? If you want to know what I'm thinking, they all work with me at our firm. They can tell you what I'm thinking with it. What about ideas? Oh, what about when's the last trading day? First notice day? What do those things mean to me? Do I understand them? I want to put this position on. Maybe I don't have the margin right now. How many days do I have? Versus some of the firms that offer the self-directed at these deep discount rate. You don't have the money? You're a blowout. I don't want to hear about that. Those are the things that you go back to a broker for and you look for help with. Give my brokers a call. They'll talk to you. And they set a rate that you can live with, they can live with, based on the amount of time and effort you need help with. It's pretty simple. 866-973-2077.